Let's talk to David Paul. He is the Managing Director of VectorVest UK. Very good morning to you, young David.
Morning, Mus.
Right,
Morning.
we've got some thought-provoking slides this morning to challenge everybody with. Let's kick off with the opening statement. The single most important thing to know is whether the market is going up or down. Everything follows from that. I wish I'd actually made that saying up because it is so true, isn't it?
Well, yes, that was put together by the founder of VectorVest, Bart Toledo, and market timing is at the cornerstone of the VectorVest approach. We want to try and find undervalued shares, shares that are growing their earnings aggressively and safely, that are rising, and we want to buy them into a general market that's rising, because there's a really good time to be in the stock market and there's an awful time to be in the stock
Absolutely.
market. And by doing that, we can put the wind at our back. And unfortunately, as the next couple of slides will show, in the UK market and in the American market, the VectorVest market timing model is telling us that the short-term trend of both markets on either side of the pond is down. And
Okay,
the longer-term trend is
we've
down.
got the UK market timing. So basically, your longer-term signals on a don't go long at the moment, and your short-term signals
That's
saying
correct.
don't go long
That's
at the moment.
correct. Yes, and certainly those people that have got the stomach to sell something they haven't got could actually be short of the market and short of the market on shares with lousy fundamentals, and should be doing quite well over the last week
Understood.
or two.
Well, let's just flip to the US market time. And again, this is basically short-term and long-term saying don't go long.
That's correct. The American market showing some very important support levels, and when you see a market falling the way it fell a month or so ago, and then rallying in that three-wave rising wedge formation, technicians would look at that as quite a bearish formation. So it's sitting on that support level. The interest rate hike was fairly benign yesterday. The market started up and it ended slightly lower on very poor volume. So I think a very important day today to see if that support line, that lower trend line, can hold. The green line is the 200-day moving average, and that is saying that the bull market in stocks in the US is still running, but I wouldn't be at all surprised to see a little bit of a pullback to test that green line again.
Understood. Yeah. Okay, well, let's go through a few individual stocks. So basically, you're going to highlight stocks that you'd like to have in your portfolio once you get the buy signal on the UK market, I assume.
Well, that's correct, yes. And these stocks have held up very well in a negative market.
Right.
And this first one, Robert Walters, I spoke about it at the start of the month. It's trying to push to a new high now, to a new 52-week high, when the general market has been very negative. It's charted an ascending triangle, which is a bullish formation. The green line above the prices are valuation, so we believe it's undervalued. And the blue line study in the window below the price is earnings per share growth, and earnings per share growth is rising. And that's the engine that drives the share price, in the words of Ben Graham about 100 years ago in The Intelligent Investor.
So that's a perfect setup in terms of your valuation model saying that basically you think the shares are underpriced. You've got the ascending triangle, which would be a bullish textbook formation if subject to a break to the upside, and you've got rising earnings per share, which Benjamin Graham would be delighted with.
Well, yes, I think the probabilities that are back. Nobody knows what's going to happen next on a trade-by-trade basis, but the probabilities there are very good, 8 out of 10 type probabilities.
Yeah.
And if we could find a few horses like that, we'd be happy.
Not sitting here, right? Okay, well, let's move on to the next company, Trifast.
Well, Trifast, I've been talking about on your program for many, many years. I think the very first mention on your program was in 2014 on Trifast.
Well, it looks like a nice return there.
It's moved up the page very nicely. It's pushing on new highs at the moment, and earnings per share is rising well. The only worry I would have would be the strength of the pound, well above 140. A lot of their earnings are in euros, but they seem to be, the market doesn't seem to be worried about that in the slightest. It's a very solid looking chart, and I would expect that to go significantly higher.
Okay, so let's move on to Gleeson.
Well, Gleeson's my favourite little builder.
You're allowed to have favourites.
Yes, it's undervalued. It's growing earnings per share really strongly. They're going to double, maybe treble, I think, the amount of houses that they're building. They build starter homes in the Midlands and the north of England, and lovely homes they are. I went and checked them out. If they were in Kensington, they'd be worth £1 million, but they're not.
Right.
So it's broken up out of that ascending triangle, came back and kissed it, and is now rising again. Over the last day or two, in a very weak market, it's charting what technicians refer to as a bull flag. And again, if the general market shows any strength at all, then I think that'll break north from that. Undervalued, growing earnings strongly, and on a buy recommendation in VectorVest, and the charting pattern looks really good. When Zach was on here, Zach used to say that VectorVest was the best of both worlds, the best of fundamental analysis married with the best of technical analysis.
Yeah, and that's because basically the fundamentals tell you what to buy, and the technicals tell you when to buy it.
Correct, it's the best of both worlds, sir.
Definitely the old adage. Okay, let's move on to Randall and Quilter.
Well, this is a small little company, a financial services company based in Bermuda, of all places, and significantly undervalued. It's only got a market cap of 140 million, I believe, off the top of my head. It's pushing up from that ascending triangle, and the numbers and the trading advice from the chairman have been exceptionally good. I would expect that to break up strongly when the general market turns. So it's a time just to watch, to let this little bit of downside play out. And when we see some strength coming out of the general market, our program will show that, then time to get back in. There's lots and lots of opportunity. Those are just the four that come off.
Yeah, well, they're sort of textbook charts for me. Yeah. Okay, let's wrap up with your final slide. As always, people can get in touch with you. You were at the Master Investor on Saturday doing a special discount, weren't you?
Well, we had a great day on Saturday, yes. We're offering a 30-day trial of VectorVest for £5.95.
Yeah.
And if you go, that special is still on the internet. If you go to vectorvest.co.uk, you can take a 30-day trial of the program, see if it's for you. And then after that, VectorVest is invoiced at about £44 a month. It's on a month-by-month basis. And my promise to everybody is that if I can't show them how to make money, then they can stop it at any time. There's no contract.
Right. You couldn't be fairer than that. David, as always, thank you for your time.
Thank you, Mus.